Hi, my name's Anita. I have recently joined T+O+M Executive from a global agency where I spent the last 7 years recruiting across the lending sector in Australia. What that means is I have been recruiting across retail, business and corporate banking primarily, and the types of roles my desk covers anything from distribution, lending roles through to credit operations and product managers. The lending market is quite segmented, so that means there are different trends in different areas of the banks and lenders that we work with. However, what we are seeing from a macro perspective is certainly a normalisation of new loan applications, more refinances, tighter credit policies, and certainly higher rates. However, all of that being said, we still have lots of new home buyer or first-time home buyer incentives in the market, and a variety of different non-bank lenders that provide access to non-conforming borrowers with great options for their loans to get them into the property market. And as a result of that, we are certainly seeing shifts in the market from a recruitment perspective too. We are definitely seeing a focus on hiring great talent in the distribution space in roles such as mobile lending or branch lender roles, but particularly for those with a strong client acquisition focus, so candidates with existing networks and the demonstrated sales success in prior roles. We are also seeing a greater demand from candidates around flexibility and greater demand for good talent in the credit operations and product space. What this means for candidates in the market is that hiring managers are really looking at the experience that you have. So, for example, strong credit ability is certainly paramount. They are looking for experienced professionals who understand and can determine and interpret credit policy. From a distribution perspective, as aforementioned, they are certainly looking for people with strong external networks. So that involves customers and also referral partners, as well as demonstrated success in acquiring new customers and running a book. And from a salary perspective, it does also mean that salaries are starting to normalise. We've enjoyed a very juicy period of salary increases over the last couple of years, 2021 and 2022 notably, and at the moment we are seeing that level out. So it's quite important as a candidate to make sure you're not pricing yourself out of the market as the percentage increase or dollar value increase on salaries starts to lessen compared to other years. So what this all means for our very valued clients is that candidates are certainly focusing more on items like job security due to all the economic ambiguity we are experiencing. As a result, they are certainly being quite savvy and very calculated in their choices. Best recommendations for our clients is certainly being mindful not to pepper ads across the market for months on end, and being selective around utilising preferred agency suppliers or perhaps exclusive agreements to apply a really strategic and targeted search for the right calibre candidate. To engage top tier talent, it's really important to be mindful of what their current salary is. So in terms of crafting your offer together, ensuring that the offer is relative to what they're currently earning, and understanding that an offer at the same level or under what they're currently earning is often perceived negatively in the market. Another way to ensure engagement in this part of the process, which is really crucial, is certainly making sure you are promoting your company's values, work-life balance, and flexible working options. Candidates are still really focused on making sure they can balance work and life. And if one thing that we all learned from COVID is that life is short and it's really important to strike that balance. And candidates are certainly looking at opportunities where they have options for hybrid working, perhaps adjustable hours depending on the role. It's really important that this is certainly communicated prior to an offer in the process.